Hello and welcome to Stocks Down Under. This is our weekly investor webinar. Good morning, Stuart.
Good morning.
We've got a lot to talk about, including a stock that we really like. You'll kick off with that one, which is Cyclopharm. Then we'll also have a look at trading. I wouldn't say strategies, but things you can do to keep your portfolio a bit safe in uncertain times. Stop losses, to be specific. We'll talk about that, and also rare earths. They've taken it on the chin, Stuart, recently. You'll talk us through which stocks right now could be interesting once the rebound comes, right?
Right.
So let's kick it over to Cyclopharm, because that's a stock that we've really liked for a long time, and They had some major news recently.
Yeah. So Cyclopharm, ASX CYC, potential payday in 2023. Now, I actually adapted the PowerPoint you're looking at here from a previous slide, potential payday in 2022. The payday is coming. Let me explain what's going on with Cyclopharm. So what does Cyclopharm do? Radiopharmaceutical company. Radiopharmaceuticals are simply radioactive materials you use as though they were drugs, or for either diagnostic or for therapeutic purposes. This company has a pretty good business in radiopharmaceuticals, did 21 million in calendar 2022 revenue. The market cap is 170 million, and we think it can go a lot higher because of Cyclopharm's lead product, which is called Technogas. Technogas is it's a gas that once the patient breathes in a small amount of the gas, it enables the lungs of that patient to be imaged in a very quick and efficient manner, and in a way that's quite safe for the patient. It's the standard of care in most jurisdictions around the world for imaging pulmonary embolisms, for example. The one place it's not legal at the moment is the US market. It's approved just about everywhere else. The company's been seeking US approval for Technogas. It got knocked back about a little under 2 years ago. It's now refiled, which we'll talk about in a moment. We talk about that in a CEO interview with James McBrayer, who runs this company. That's on our website at stocksdownunder.com, and the interview was done on the 4th of April, 2023. So FDA approval of Technogas coming soon. The company filed for approval of this some years ago and got back from the agency what's called a complete response letter. It's called a complete response because it's the agency's final say on why they will not approve a particular drug or medical device. If I could summarize the issues that the FDA had, they were concerned about understanding the safety profile of the product a little better and the way in which it's been made. In order to satisfy the agency's concerns, Cyclopharm first had to go back and have a meeting with the relevant officials at the FDA, then take away their feedback, come back with the relevant paperwork to answer those questions, and then refile. If you were to print out that paperwork and manually transmit it, it would be thousands and thousands of pages. So it's a big job filing or refiling for FDA approval of a product. As I say, they got the complete response letter in June 2021, and they just refiled in the last week or so. So that's telling you that these things are onerous. But it mostly had to do with not necessarily. It had nothing to do with whether the product was safe or efficacious. Basically, the agency just needed to understand more about it. Now that the refiling has happened, you're in a position where the agency gives themselves up to 6 months to review the documents and then come back with a yes or no. We believe it'll be a yes. Ordinarily, when products get before the FDA, there's an 80 or 90% chance that the agency will say yes. They don't say yes every time. I've seen products that have got 3 complete response letters before the fourth. A product got approved on the 4th attempt. So it's not a lay down misere that they'll approve it this time. Please let me say that again. This is not a lay down misere that they'll get it this time. But I believe that the extra 2 years worth of work they've done increases the chances that the agency will say yes. And if they say yes, it's a reasonable bet in turn that there's a big re-rating coming for Cyclopharm stock. Meantime, they've got an existing business, as I say, well in excess of $20 million in revenue. Company just took control of its distribution businesses in a few key jurisdictions. So it's able to grow that business without relying on third parties to distribute the product. And the gross margins for Technogas is generally about 75%, so it's a good business. We won't find out how they're doing at that level until August, but Technogas and other Cyclopharm products remain popular with the user base in most countries around the world. So it's reasonable to think that there's going to be a decent growth rate coming up in August of next year. But in the meantime, you've got that big uplift where approval in the US market can not just double the market opportunity, but potentially increase it 5 times. Reason for that is the company is seeking approval for the use of Technogas in diagnosis of pulmonary embolism. But there are plenty of other indications that can come beyond that. And James McBrayer and I talk about some of those in our video interview. So we commend that video interview. James interviews very well. There's another interview on our website, which we did a couple of years back to compare as well. Plus, there's some research that our friends at Pitt Street Research have done. So plenty of ways to familiarize yourself with this business. But let me summarize. Superior product in Technogas, used everywhere except the US. Multiple users for that product. Existing business is strong. And this company's got 20 million in cash and no debt. So no reason to worry that it's going out of business anytime soon.
All right. And I saw this morning they just published a new investor presentation on the ASX platform, which basically explains the process that they're now going through. So if you're interested in this one, have a look at that presentation. I think it is really good. So that was Cyclopharm. Then this is something on how to use stop losses, and a new quick presentation, because we get a lot of questions from subscribers about this sort of stuff, and so we figured we'd talk about it, and also in an example show how it actually can save your bacon. Because sometimes, when you buy stock, you're bullish on it, and then it starts to trend down, and you think, it's going to turn around. It's going to turn around. We'll get better. But then a couple of weeks later, a couple of months later, you see that it's down 40, 50% or even more. And there comes a point where you say, well, there's no point selling it now because I've made such a big loss already. And it potentially could trend down further. So the simplest way to avoid all that is to just include a stop loss in your trading strategy for a particular stock. It will protect your downside while it keeps the upside open. It takes the emotions out of your sell decision, because sometimes, I think when things trend down, you're like I said earlier, this is going to bounce back really soon.
And Mark, both of us have been guilty of that, and we're investment professionals. So yeah, it's a sin that afflicts all of us in the investment community.
Absolutely. I dare to say every investor at some point in their investment journey have made that mistake. And if you haven't, you're out of this world. Maybe Warren Buffett has never done that. I don't know.
Look, Dr. Spock on Star Trek, if he was a trader, he would not have this problem. But he's not human either. I understand he's Vulcan. Is that right?
Exactly. Yeah.
Right.
So it's for us mortals. A stop loss is very helpful. On average, it will improve the performance of your entire portfolio, because if you can cut your losses but let your winners run, on average, that will do wonders for your performance. So an example for stocks under concierge, one of our early stocks last year in May 2022 was Sandfire Resources, based on our bullishness on copper at the time. So we got in at 515, expecting the stock to go into the high sixes, sort of 670 was our target at that time. And you can see in the chart there, initially it went up, which was good in the first couple of weeks, but then something happened in China where all of a sudden the perceived demand for copper was less, and the copper price started to plunge. So at some point it hit our stop loss, and usually what we do with the stop loss, and this is sort of some people just sell immediately, other people take 3 days to see if it actually bounces back above that level. That's debatable. You can do that. You can't do. It's up to you if you want to do that. So at that point, our stop loss was hit. It stayed around that level for a couple of days, and then it went down further. So we sold immediately, and we got away with a limited 5.2% loss on Sandfire Resources because of our stop loss that we implemented. And as you can see in the chart, there have been at least 4 instances where the share price has gone lower than that, bottomed out around 320, I think 325 in October last year. At that point, if we'd stuck with Sandfire, we would have made a 37% loss on that particular trade. So in this case, it helps save our bacon. We've had 2 other stocks where our in concierge where our stop loss was triggered. And it's helped us on average for the entire portfolio, which is now, I think, 9 or sorry, I should say trades, all of the trades on average, which is 9 or 10 of them now, to limit that loss. And as a result, we've outperformed the broader S&P by more than 26% points since last year. So I think it really helps improve the average performance of your portfolio by cutting the losers, no matter how painful it actually can be on at that time. So what you need to do if you want to use stop losses, check it to see if your trading platform enables it, or allows you to do that. So for instance, ComSec, the platform has it, and if you don't know how to use it in the platform, just give them a call, because they will explain it to you. So give your provider a call if it's other than ComSec. We don't know about all these platforms whether or not they have it, but ComSec certainly does. And like I said, it can save you from incurring big losses, big trading losses, and then as a consequence, on average across your entire portfolio, it can actually improve the performance quite a lot. So that's why we use stop losses. And like you said, Stuart, we've been guilty of sticking with certain stocks for too long in the past, but stop losses can definitely solve that problem.
Right.
All right, then finally, another sector of the market that we've always followed quite closely. I remember, Stuart, a couple of years ago, we talked about it a lot, and it's done well since then. More recently, this entire sector, rare earths, has come down quite a bit. So talk us through why that is and what we should be keeping an eye out for.
Right. So, Mark, as you know, I have a contrarian streak in me. I like to go to the investor conferences for the resources sector and talk about and look at with the companies at what kind of projects they're investing in. And for the last year or so, every second mineral explorer wants to have a rare earths project in its portfolio. So rare earths have been all the rage. No surprises then that the price of rare earths, which we'll be talking about in a moment, have come down, and the sector's been out of favor. Let me talk about what rare earths are, and then I'll talk about why you should be watching right now. Okay, so if you paid attention in chemistry at school, now, Mark, you were always a diligent student, so you probably understand this chart better than I do. That's the periodic table. And if you break out the lanthanides, which is the sort of fold-out section on column 3 there, that's the rare earths. They're not actually all that rare in the Earth's surface, and they've been known about for a long time. Rare earths were actually identified as such in the 19th century by some various chemists in Northern Europe. But it's rare for them to occur in economic quantities in the ground. That's where we get the rareness from. And they've got funny names like praseodymium or neodymium, for example, or cerium or samarium, or gadolinium, for example, terbium. They're the ones that you don't actually have to deal with every day in science class, but they're important enough to know about because of the applications that are showing up in the 21st century economy. Let me talk about several of those. So you want to build a wind turbine. You need a permanent magnet in that turbine to be able to turn it around. Neodymium and praseodymium go into that. Same deal with the kind of permanent magnets that would go into electric vehicles, not just hybrids, but the fully electric ones. Your smartphone's probably got some samarium in it or terbium in some way. Energy efficient light bulbs need that sort of stuff. Anything that's 21st century is going to need rare earth minerals. And that turns out to include a lot of the sophisticated military equipment that countries need to defend their interests at the moment. And here's the extra rub. If you click to the next slide, everyone has been worried witless about rare earths because China owns so much of them. The legendary Deng Xiaoping said back in 1992, Saudi Arabia has oil, we have rare earths. So at its peak, something like 90 to 95% of the world's output of rare earths was coming from mines and refineries in China. That pretty much gave that country a hammerlock over some pretty important metals that have become more important over time. And this chart documents how that monopoly is diminishing. But my argument is it's not diminished yet because it's only been in the last few years that countries other than China have realized that it's probably a mistake to allow China to have that much control over key commodities. The giveaway for me that this was going to be important was when I read that if you need an F-35 fighter jet, turns out that the vital components are made out of material coming from China. The last thing Uncle Sam wants is have to go and ask its potential future adversary for some rare earths to actually get military material to fly. So everywhere you look, Western powers are trying to encourage the rare earths infrastructure that doesn't rely in any way on China. And China is formidable in terms of the knowledge base that country is invested in, streets ahead of the rest of the world. Now Western chemists and engineers have to catch up. There on this chart is on this particular slide is the chart of Lynas, the leading rare earths company traded on ASX. Code is LYC. They own the Mount Weld mine in Western Australia. They also do some downstream processing at a plant in Kuantan in Malaysia. They're building a refinery in Kalgoorlie, and they've also got plans to build some capacity in, I think, the US state of Texas. So this is an important company. As you can see there, up until about a year ago, the stock was riding high based on market interest in rare earths, combination of rising prices and the realization that this company had something that the rest of the world was needing a lot of. But things have gone off the boil in the last 12 months. And that tells you that rare earths are going out of favor. Pretty soon, if you bring up rare earths at a barbecue, people are going to be looking to change the subject. That's when I get interested, because at some point, people are going to want to pay attention to some of these rare earths players. And so I'd look to see, as Lynas as a bellwether, maybe trending back to the levels you see more on the left-hand side of that chart, at which point rare earths become very interesting indeed.
So two questions, Stu. Why did the interest in rare earths come down? So why is, in this case, Lynas' share price coming down? And second, what could trigger a move all the way back to the levels that we see there at the start of the chart?
Right. So part of it is prices. You can actually check the price of various rare earths traded in China and elsewhere, and the price has been coming back. So that's been part of the action. And also, there's also supply and demand. You know, as new projects come on stream, you know, suddenly there's a little more rare earths capacity around. So it's the old supply-demand factor. A lot of commodities have been going backwards because of the unusual inventory positions that resulted from China's lockdown, for example. So that's part of it. Why would you wait? Well, you know, price trends have a way of building on themselves. So once prices get back to the levels we saw maybe 2-3 years ago, at that point, no one will be interested. But the existing producers will probably be trading at very inexpensive levels. So, well, that pretty much replicates our thesis. Rare earths are very important if you live in the 21st century. They go in and out of favor, and they're coming out of favor now. But the thing that will not change is that public policy is favoring new projects. So you come up with some decent rare earths infrastructure, and you can build it from scratch with the help of that doesn't involve any of the existing players in China. The taxpayer stands ready to help, basically. So stocks to watch. I mentioned Lynas before. Iluka, the mineral sands miner, is building a rare earths refinery at a place called Eneabba in Western Australia. Then there's 3 emerging producers. Arafura Rare Earths gets their Nolans project up and running this year. Hastings at Yankabana in Western Australia, that's now looking for project financing. And then there's Peak, which owns one of the largest projects globally over in Tanzania. Tanzania has come back onto the radar screen of international investors in the last couple of years, and it's fair to say that it won't be hard to fund a project of the size of that company. So 3 companies to keep on your radar screen. Obviously, Lynas at the right price is probably worth paying attention to, and Iluka is a good beneficiary as well.
All right. Just let us know, Stu, when the bell rings to get in, and we'll all jump on board. Because that's always the trick, right, with this sort of stuff. When is the turn coming?
Right.
But yeah, to our all our viewers, if and when we see that, we'll try to alert you to that as well. So that brings us to the end for this week's webinar. Thank you, Stuart, and thank you everyone for watching, and we'll see you next week.
Stay bullish.